Of course, the question on everyone's mind is what the hell is happening now? With price inflation spiraling out of control, the producer price index rising at almost 10% annually, and the Fed seemingly having lost control of the consumer price index and all the other indices that it watches and supposedly controls, why is silver still falling?
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and it is time for this week's Rafi Farber's weekly Endgame Silver Report on the Arcadia Silver Network. Before we get to that, quick note about Silverfest ounces. A lot of you guys won silver at Silverfest 2. Those are most certainly still coming. I just started getting the first round to some of our bigger winners and volunteers out, and I'm not sure when we exactly will be getting the rest out, but if you'd like to check in, make sure that your name, address is correct, and the number of ounces you won that we'll be sending out is correct. I can assure you I do most certainly want everybody that I promised to give silver to receive it. So you can check in on that at support@arcadiaeconomics.com. And again, we'll be getting those out soon, hopefully maybe even before Christmas. Just a lot going on, and especially with the fraud out of the CFTC, plenty to do here, but support@arcadiaeconomics.com if you'd like to check in on that. And lastly, before we get to Rafi, just a quick thank you to David Stein of Kuya Silver, one of the companies that personally I've been enjoying following. Appreciate they're a supporter of the show. And certainly in today's hyperinflationary environment, where I think we're eventually going to get some sort of common sense back to these markets, Kuya Silver, a stock that I would suggest you may want to look at for further due diligence. And with that said, here's Rafi.
Hey guys, Rafi here from the Endgame Investor, coming at you with this week's Silver Report, December 16th, 2021. And boy, have we got some fun charts for you. Yes, silver has been beaten down this week and last week, and actually for 5 of the last 5 weeks, which is the longest weekly decline since the 2018 bottom. Remember that time in 2015, 2016, when gold and silver finally bottomed after a 4-year bear market and mining stocks started to climb like there was no tomorrow, until silver topped at about $21.40, and we thought that everything was going to the moon. Well, that top is now the bottom. See this chart? This is the old silver top from July 2016 at just about $21, which is where we hit twice in 2020 after topping at 30, and again at the end of September, and again just now. These 4 tests have been the 2016 top. So as bearish as you think sentiment might be, we have still not broken through that top. The top is now the bottom. Now the interesting thing is that this 2016 top actually goes back much farther than 2016. In fact, it goes back to March 2008, all the way back here, just before the 2008 financial crisis, when we all began to realize that the monetary system was finally crumbling under its own weight. Here in March 2008, we have a top at precisely this number of 2144, which we hit again in 2014. We hit again at the 2016 high, and now we are hitting it again from the upside. Now it is support. The question is, can we, will we break through it? The answer is, it is possible, as happened in 2020 in March during that collapse. We see here we have a triple bottom just like we have now at around 2144, but this time it was around 1380. It was hit in 2017 and then again hit twice in 2019. And looks like we broke out here when we hit above 20, but then the March 2020 crash came and we broke through $11 actually to a low of about 10.50. But that low, that new low that was finally broken through, that 1380 support level only lasted for about a week. So the answer is yes, it is possible that we break through the low of around 2140. But if we do, it will only be for a very, very short period of time, given the box that the Fed is in, that they cannot stop printing. And now that the taper is about to take effect, they will see that asset prices are going to get hit very fast, and they will have to reverse course almost immediately, which will bring the precious metals back higher in no time. Now, about breaking the previous support levels, as I said, it was just possible. It's not necessarily going to happen, so don't count on it. We see here in the 2008 liquidity crunch, a liquidity crunch which might be upon us, and I will explain more about that in the next few minutes, in the next few slides. We see here a double top at around $8.30, hit in 2004, 2005, and then we climbed and climbed and climbed and hit that bottom again from the upside. It became support at the 2008 low at the same level of around $8.33. And then we took off again after that financial crisis played its course. The question is, are we on the verge of another liquidity crisis as we saw in 2008 and 2020? The answer is probably. In my view, it is more than likely. And what do we do in that case? And what are the signs of it? The first big sign is a breakthrough in palladium, which is very sensitive to liquidity crises. Palladium is another precious metal that is most used in catalytic converters for cars. And we see here that a breakthrough of the 200-week moving average is an extremely rare event. It happened once in 2001, once in 2008, once in 2015, and once now in 2021. In each of these scenarios, there was either a major or a minor liquidity crisis and bear market in stocks and commodities. In 2001, it was the middle of the NASDAQ bear market from 2000 to 2002. In 2008, we all know what it was. In 2015, there was a flash crash in August 2015 and a deflationary spiral spurred by a yuan crisis in China. And finally, we have another breakthrough of the 200-week moving average just now, just this week, and palladium continues down today. And there is something about palladium that you should know. I always wonder what it would be like if the paper price of silver never got in the way of the physical price. What would that kind of world be like? Well, on this chart of palladium, we can see quite clearly what it would theoretically be like. Here we see from around 1982 to 1997, open interest in the palladium paper contract was elevated mostly above 5,000, historically elevated from the 1970s till the 1980s. It became elevated, and then suddenly it collapsed in 1997, 1998. And here, around 2000, 2002, the open interest in the palladium contract became so low, and look what happened to the price of palladium. It reached a peak here precisely because paper markets were manipulating the price a lot less. But here you see that paper interest, open interest, began to spike. The old high of around $1,200 was not overtaken until about 17 years later. And then look what happened in 2020 when you have a collapse in open interest, and you have open interest going back down to levels of the mid-1980s and 1990s. Again, the price spikes to record highs. Now we are headed down. It looks like we're on the verge of some kind of liquidity event, which is being confirmed by platinum, which is another word for little silver. Here we have platinum breaking through the 200-week moving average. Platinum is another metal that is very sensitive to the liquidity situation because it has very narrow industrial uses, mostly confined to, again, catalytic converters. Now, we've heard a lot about inflation lately, about the inflation statistics that have been going on. We've heard records You've heard a bunch of numbers. Here is a chart that you probably have not seen. This is the producer price index for intermediate demand. This is intermediate demand, meaning stuff that is used for imports to create goods and services for final demand that are on the supermarket shelves in other retail stores. Here you see that the price index for intermediate demand has not accelerated this fast since the stagflationary years of 1974. And always, almost always, when you see a peak like this, the only thing that brings it back down is a recession. We saw it in 1974. This gray area is a recession. We saw it in 1980, continuing into 1982 into the double dip. We saw it again here with this spike into the 1991 recession, again here into the 2000 recession, again here, the spike from 2008 goes way down into negative territory in the 2008 recession. So what do you think is going to bring down this price spike? The answer is the next recession, which is going to bring down heavily asset prices. Now, of course, the question on everyone's mind is what the hell is happening now with price inflation spiraling out of control, the producer price index rising at almost 10% annually, and the Fed seemingly having lost control of the consumer price index and all the other indices that it watches and supposedly controls. Why is silver still falling? I'm going to show you a chart from 1979 to 1980 that can help explain things. I believe that what is happening now is that markets still believe the Fed can use its tools to control consumer price inflation. And that is exactly how the Fed is pivoting, given yesterday's announcement that they will be accelerating the taper and hiking interest rates in 2022. This is a very big turnaround that not even the most hawkish of prognosticators were expecting. That is indeed what is happening. The Fed is now fully engaged in the chase of price inflation that the market thinks it can still win, but it can't. I'm going to show you on an annotated chart how the Fed almost lost its price inflation chase of 1979 to 1980, and how, in parallel, this time, they will lose it completely. This is a zoom in of three things. In blue is the effective federal funds rate, the overnight rate that the Fed either hikes or cuts that gets all that coverage at the FOMC meetings. The orange is the CPI inflation rate of the late 1970s that was much more honest back then and more reflective of how prices were actually rising. In purple, we have the silver price. There are three stages here that I boxed in black. The first is the Fed's attempt to seriously rein in consumer price inflation here. It's labeled stage one, where the Fed says, let's rein in inflation. And what do? They raise rates from about 12% to what looks to be close to 18% in a few weeks. What happens to consumer price inflation during that attempt? It stays mostly flat. This orange line is flat over here, very, very slightly moving down. After that attempt to rein in consumer price inflation, Fed pushes rates back down and thinks that its mission accomplished. They leave rates around, looks to be 13% after hiking them to about 18%. They leave them there to see what happens, and consumer price inflation, the CPI, starts to trickle higher and higher despite this, despite rates being at around 14%. And then that is when silver takes off in the purple line to $50 in January 1980, and we reach stage three. Oops, I guess price inflation is not under control. So what do they do then? They hike rates to a record, and only then does silver start falling. And only after interest rates reach almost 20% does the consumer price inflation rate really start to fall. After this, through 1980, 1981, 1982, etc. Now, how does that differ from today's scenario? Well, we are at stage one, where the Fed is going to now try to rein in consumer price inflation by tightening monetary policy, whether that means taper, raising interest rates, whatever. But very soon, once markets realize that those tools are not anywhere near enough, given that rates have been at zero for almost 10 years straight now, or 12, depending on where you account from, there is nothing the Fed can do to stop consumer prices from rising. These prices are not set by market prognosticators and technical analysts looking at charts. They're set by consumers that are looking at their supermarket bills and thinking that they have to buy now or else they're not going to be able to eat. You can't convince those people based on the Fed hiking interest rates by 25 basis points because they don't even know what that means. They just need to eat food. So what is going to happen here is that the Fed is going to try to tighten. It's going to realize that it has lost control of price inflation, and that is when the precious metals markets, and especially silver, are going to take off to new highs that we can barely fathom today. And it's going to be quick once it starts. Exactly when it starts, I don't know. But it's going to be soon. It's going to be in our lifetimes, and you've got to get in before it starts. This is Rafi, the Endgame Investor, with the weekly silver report for Arcadia Economics. I'll see you next week.
Well, thank you again, Rafi. Another incredible silver report. I know it's really helpful for people at these times. Certainly helpful for me to see your perspective each week, looking at different things, but coming to many of the same conclusions. So I thank you for that. Again, I'd also like to thank David Stein of Kuya Silver one more time. As you see here, Kuya and David are building the next high margin silver mining company. And if you click over at the news, there you can see their new 43101 technical report for the Silver Kings project, information about the expansion of the Bethania Phase 2 exploration program, and more. David is also very accessible. If you click on the contact tab, you can get information, more updates, and all that good stuff at kuyasilver.com, which is also in the description field in the link below. So with that said, appreciate you being here. Hit the subscribe button and the notification bell, and I will see you again tomorrow.